What's up, friends? It's time for a long overdue and very important precious metals update. May 1st, 2011. Thousands of silver contracts are dumped onto the very thinly traded after-hours silver market. The ensuing 13% price plunge in silver in less than 15 minutes leaves the investment world stunned. And the price destruction for silver has only continued in the weeks since, leaving informed investors around the globe with two completely differing thoughts. 1. How could this happen if silver trades in a fair and honest market? And 2. Thanks for the bargain prices. Some of the brightest minds in the world are speaking out against this massive silver manipulation. In this report, we'll cover Eric Sprott's latest. Chris Martenson sounds the alarm on the extraordinary fundamentals of silver, and we'll hear from Bix Weir in person on what he feels is the true ratio of paper to physical silver manipulation. And here's a heads up. Bix thinks it's greater than 100 to 1. Billionaire investor Eric Sprott released his latest entitled The Tyranny of a Rigged Paper Monopoly Over Silver Price Discovery. So let's jump to the chase. Sprott writes, quote, "The world will only supply about 979 million ounces of silver this year from mine production and recycling of scrap, of which it is estimated that 657 million ounces will be used up for non-investment purposes. That leaves roughly only 322 million ounces available this year for investment." Sprott notes that throughout the month of April, at least 1.1 billion ounces of silver traded each day. Now converting that 322 million ounces of available silver for investment purposes into the total paper silver traded in April leaves only about 1.3 million ounces per trading day of available supply. And Sprott notes, quote, "So we are trading the amount of actual physical silver available for investment 891 times over each day in April." Stay tuned, because Bix Weir is coming up and he runs down the massive paper fraud for May. Next, from the brilliant mind of Chris Martenson, we get this article, The Screaming Fundamentals for Owning Gold and Silver. This comprehensive piece might be a great fit for friends and family who still have not taken steps to convert any of their fiat dollars to precious metals. Chris notes in this piece the drastic worldwide imbalance between silver mining supply and silver demand as the result of industry, fabrication, jewelry, and investment purposes. Martenson concludes by writing, quote, "There's only so long that such an imbalance can continue before the shortfalls require much higher prices. Given the fundamentals," writes Martenson, "I project the prices for the precious metals will be many multiples higher in today's dollar terms by the end of the decade." I'll link both the Sprott and the Martenson articles below. And guys, if you think the paper games for April defy any degree of rationality, wait for this report on the numbers for May. So time to go to the phone.
And so now we turn to Bix Weir, who I have on the line, for his opinion on the latest CME May metals update. Bix, how are you?
I'm doing well, Sean.
Good to have you on the phone. So we're coming off this Chris Martenson article arguing the incredible fundamentals for the reasons to own silver, and Eric Sprott's new one, The Tyranny of a Rigged Paper Monopoly Over Silver, and on the heels of those, we have your new article, Frightening Comic Silver Volume in May Massively Distorts Silver Price. There's some shenanigans going on in the silver futures and options for the month of May. Bix, what's your take?
Well, the CME just released their monthly metals update for the month of May, and the numbers are really startling. And once you look at them, and once you understand the underlying commodity that is being traded, it's completely out of the ballpark. According to the CME, there was about 655 million ounces of paper silver traded every day in the month of May. And to take that number, 655 million, and to times it by the amount of trading days, there were 22 trading days in the month of May, you come up with 14.4 billion ounces of silver. It's all paper silver, futures and options, but it's a number that is so out of the ballpark, considering there's less than 90 million ounces mined and supplied into the market, into the physical market, every month. So a number coming out of the CME, out of the COMEX, for May of 14.4 billion ounces traded is completely ridiculous. I mean, that's, if you're looking at the amount of leverage compared to the underlying asset, that's 160 to 1 paper ounces traded versus physical ounces available in the market. It's just a joke. is completely out of control.
Now let me ask you, let me interject, just to help level set for the audience. When you say that that's 655 million ounces of paper silver traded per day, that's roughly equal to the total amount of silver mined in a year, isn't it? Between somewhere in the neighborhood of 650 to 850 million ounces of physical silver is mined planet-wide in 1 year?
Well, if you look at the World Silver Survey, it's put out by the Silver Institute, that has the total supply, including old scrap, government sales, mine production. Those are the three physical categories. They have mine production. They have all the total supply at 955.7 million ounces for 2010. Just out of the mine is 735, but you have to calculate in government sales, and you have to calculate in scrap silver.
Mm-hmm.
So, I mean, you really you can put it at 1 billion ounces and be safe, and that's too high for the physical silver supply.
Yeah.
Now, but that's a whole year. We're just talking about 1 month. In 1 month at the COMEX, they traded over 14 billion ounces of paper silver.
Yeah, and I've got the precious metals production chart for 2011. It's a live chart. It's on my website, and I'm looking at it right now, Biggs. And we're past the 6 month, the halfway point for the year, and the total worldwide production for silver right now is clocking in at 350 million ounces. So you write in your latest article here, "Frightening COMEX silver volume in May massively distorts silver price." You write in your article here, wait a minute, these are not legitimate trades in silver, but rather silver derivatives that have lost all touch with their underlying physical asset.
That it's true, but it gets even worse than that, because this is just the COMEX contracts, the COMEX futures and options contracts. There are other markets trading paper silver back and forth. There's the LME, there's the silver certificates, there's silver swaps, there's the OTC silver. All kinds of paper contracts are going back and forth, all base their functionality and their legitimacy from the physical silver market. And the physical silver market is saying, no, this is all completely hogwash. The physical market is not that high on a monthly basis. It's just over 80 million ounces of physical that is introduced into the market. Everything else is a derivative of silver. It is not real silver.
Okay. So, one of our friends out there in YouTube land, John from Australia, Stella, he pins the paper manipulation of physical silver to, paper silver, somewhere in the neighborhood of 20 to 25 to 1. Adrian Douglas's research is pinning that paper manipulation ratio somewhere in the neighborhood of 50 to 1. I've long claimed it was closer to 100 to 1. But you're doing the analysis here and saying that, if you're counting derivatives, we're looking at 160 to 1 and possibly even as high as 500 to 1 leverage.
It is. According to the data put out by the COMEX, put out by other institutions who claim to be, counting the real numbers based off each individual trade, that ratio should be about 500 to 1, including all the different markets. Now, 500 to 1 paper versus physical metal is completely outrageous, but it fits in line with why the price of silver can go from $49 down to $35 in a blink of an eye. It is not physical silver that's being valued anymore. It is the value of derivatives of silver, paper silver that has no basis in in any kind of reality. And until we remove computer programmers and computer trading platforms from the market, we will never know what the true fair market value of silver is.
Yeah, and in fact, at the end of your article here, you conclude with the statement, the physical silver market has been 100% destroyed by silver derivatives. We're at a very dangerous point in the silver market as 500 to 1 leverage doesn't unwind in an orderly fashion.
It's true. We're at that point. I know a lot of silver investors are feeling a little down because they saw silver go to $49 and they're seeing it back in $35, and they're afraid that the manipulators are going to unleash more computer rigging programs that will drive the price even down further. anything is possible on the paper silver market. On the physical market, you can't fight with the numbers, right? You can see that there is a lot of silver derivatives having to be deployed into the market to control the price of silver, because people are waking up. People are waking up and finding out that the price of silver has been rigged for so long, and there are so many things that need to work out of this market before silver can be freely traded, that the moment of realization, the moment when the silver rocket takes off, is extremely close. And they're going to rig the market as much as they can to the very last second. And then silver, physical silver, will trump the 500 to 1 derivative silver, and it'll be game over, and you're going to see mass chaos. But if you're holding physical silver, you will receive the leverage of that manipulation.
Well, Bix Weir, thanks for checking in. As always, we really appreciate your perspective. It's always great speaking with you.
Thanks a lot, Sean.
All right, we'll talk to you soon.
Bye-bye.
Well, that's it for now, friends. Taking everything discussed in this video into consideration, one can only conclude that physical silver at anywhere near the current price is an absolute bargain and the direct result of massive paper manipulation, be it 20 to 1, 25 to 1, 50 to 1, 160 to 1, 500 to 1. It's a bargain at today's prices. Until next time, thanks for tuning in.